Hey everyone, this is Mark from Stocks and Cash. It is Wednesday, March 14th, 2018. I'm here with your market update video and I'm going to talk about my holdings and some potential trade setups for tomorrow. So this is a SPY that I have up here right now, and if you listened to me yesterday, I said that I thought today we would come down and fill this gap either today or tomorrow, as in Thursday. And today we did not actually fill that gap. We came into the gap, but we didn't completely fill it, which was also true on the upside just a couple days ago. We went into the gap on this candle here, but we didn't actually go up and fill it completely. So we have two partially filled gaps, very close to each other, within about $5 or $6. So I am considering this zone that we're in, that I've drawn here, kind of our no man's land zone. And truthfully, I am not planning on taking too many trades, at least not in the SPY itself, until we break out of here one way or another. Now, if we close just, a little bit below here, I'm not necessarily going to short heavily or anything, but I just don't think the market has a direction right now. And once it picks, then we can start getting into some trades. But until then, at least trading the SPY itself, I am going to hold off on getting in long or short. I think either of these gaps still need to fill. I wouldn't be surprised if we fill this lower gap and bounce and fill this gap, and then who knows, maybe we come back down again. It's been a crazy, month and a half or two. So that's one potential option. Maybe we bounce up and we fill this gap and then come crashing through here. Maybe we don't fill one of those gaps right now. Maybe we bounce off this 8 EMA and continue on higher. Maybe we, fill this gap and push on lower. Truthfully, based on a lot of the individual stocks that I've been looking at, we're kind of at a support zone. Some stocks are actually pushing through that support zone. So in my mind, we're looking a little bearish, looking a little weak. I honestly wouldn't be surprised if we push through, if we fill this gap and then push through lower, potentially. Whether that means we start making this ascending trend line and forming a wedge type pattern, which I could briefly draw for you here. Something that looks like this. Pattern similar to that. Or, delete that. Or perhaps we come down and test this low here from the second, or maybe even from the ninth. I think the ninth is a long way off to come back and test that. It's certainly possible. I'm not necessarily that bearish, but I would think that this is a potential target here at 265 or so on this candle on the second. So short term, my perspective is a little bearish. I was bullish here on this candle, and I think rightfully so, not knowing what was going to happen the next 3 days. We had pretty strong volume and indicators were pointing up, but again, we have to be nimble. I did liquidate most of my positions today. Had a very small gain today. I closed my SPY puts, closed my MasterCard option, and I closed my JP Morgan trade, which JP Morgan I was down on, and didn't want to stomach any more of a loss on that one. So I'll show you those charts shortly, but I guess my final thought on the SPY, basically to reiterate, is that I do believe this is kind of a no man's land zone. I don't personally want to trade anything until we clear out of this area and hopefully start indicating a pattern that we can start to follow. So let's take a look at the Qs, see what they did. And as you can see, we came and touched the 8 EMA, bounced off there, and pretty much closed about the same area as we closed on Tuesday. So, Q's looking a little more strong than the S&P. Anything could happen here. We could continue to roll over on the on tech, which is what the Qs represent, or perhaps we bounce and the Qs move higher. Yet to be seen. That being said, I still am kind of bearish. The Qs still have a gap here that needs to fill. I say need, it doesn't need to fill. It's just that gaps tend to fill. So, this gap filled nicely yesterday, and maybe we come down and test or close this gap tomorrow or sometime later in the week or early next week. But I would expect this gap to fill before we move higher on the Qs. So just some food for thought there. The market has a mind of its own, as we all know. Potentially we could just bounce off here and roll. Maybe we could just come down and retest this low here at 162. But one way or another, I do believe this gap is going to fill. And again, I don't necessarily trade the Qs. I don't necessarily buy calls and puts on the Qs. But if you were going to trade it, you could think of kind of a similar area here. To me, the no man's land would be somewhere around this gap fill, and then probably the high of this this candle on the 13th. So you get a little wider range here, 175 down to 169 or so, 168. So about a $6 range here that, in my opinion, you probably want to steer clear of until we have a more definite direction. Although I say that, but the Qs do look a little more. They look like they're behaving a little bit better than the SPY is. You can see a clear higher high, lower, higher low rather, higher high, maybe a higher low, and maybe we continue on. So Qs are definitely looking healthier, but again, I'm not willing to just stop buying calls and thinking we're going to bounce from here. We got to see what the market shows us in the coming days. So again, bounce is possible, but I'm not putting all my eggs in that basket. I'd like to see more of a clear direction from the market. So let's take a look at MasterCard. We did come down and touch the 8 EMA, as I said that we generally like to do. The difference here, though, is that the 8 EMA is starting to roll over. So typically when you touch it or kind of come through it like we saw on this candle, the 8 EMA is still rising. Now it's starting to turn over. So it looks like we're starting to turn to roll on MasterCard. Again, I'm not predicting doom and gloom that we're going to come flying back down and testing 150 156 levels. Again, it's possible, but that's quite a fall for a stock that's been pretty consistently rising over the last few months to a year. So I do think that MasterCard could come back down and maybe test the 55, maybe test the 21. But I decided to get out of the trade and look for a better entry. JP Morgan, this one hurt. We broke out here, breakout failed, broke out here, and the breakout failed again. So I ended up closing somewhere around the 8 EMA. I think when we started pushing below the 8 EMA is where I got out of the trade. So out of those JP Morgan calls and the SPY itself, which we already looked at, basically I got out. I can show you on the daily. Let's see. Wednesday here. So we came down and had a nice push low around 11:30, and then when we started to get up back above this, these wicks here on this candle is where I exited out of my puts. Obviously, I could have held on to them a little bit longer, but when we kind of broke out of this downtrend almost, I thought that the markets might have rallied a little bit. They obviously didn't. We finished lower, and again, I'm out of most of my positions. So everything else was relatively flat today. I'm pulling that up right now. Let's see. So for solar, I'm still in, down about 13% on that trade, and Intel, I'm up about 5%. So just a couple positions, nothing crazy. So my risk is pretty much off. I'm mostly in cash right now, and again, I'm waiting for a direction before I start getting into anything on the market itself, on the indexes. Now that being said, there are some potential bearish moves if the market continues to roll over that I think are good setups. So let's take a look at those. We have Best Buy. Best Buy was in this ascending channel. You could call it a wedge potentially. It broke, and now we're pushing lower. So we've, the real breakout of that wedge was about here on the 12th. We've been pushing lower through that. We're below the 55 EMA. We're out of our warning slash support zone in the in the Fibonacci levels. So I do think it's possible that we could come down and test this 100 simple moving average, or maybe even come back and test the lows. As this starts to come down, the 100 will gradually come down with it. So I don't know if the 100 will actually come down and coincide with this low here, but it could probably get close. So that's probably a solid support zone when this 100 rolls a little bit more, if Best Buy starts pulling back down. So if the markets roll, you can look at the indicators. You see it's very bearish Stokes. MACD is crossed over bearishly. RSI is looking bearish, and all of these indicators have more room to go. So if you're looking for a short trade, Best Buy looks kind of ripe for a short down to the 100 simple moving average. Let's take a look at CVS. You can see CVS was kind of, well, it's really been in a downtrend since back here in late 2016. It hasn't really made too many higher highs. It kind of came back and tested this pivot point that it made here back on 10/23 in October of 16. It tested it here, but it couldn't hold, fell back down pretty severely, channeled for a bit, fell back again, retested those highs, and now we're falling once again. So it'll take a little closer look. You can see there's a low here that's acting as support. We're kind of touching that area right now. If we push below this wick here on the 7th, I think CVS has ways to fall even further. So currently trading at $67. I think it could come down to $63.45 or $58.58 if the market decides to roll over. So something to keep in mind on CVS. Now the other side of the coin, and I think it's a risk because of how severely CVS is, kind of declined, but you could see that perhaps this is a bottom, and this could reverse. But I would expect that the overall market would want to show some reversals before you even considered that. And we are so far below our moving averages. It just, to me, it doesn't make sense to get into the trade at this point in time. So long anyway. So what I'm looking for again is a close below the wick on this candle on 3/7. A couple other trade setups potentially. XOM, ExxonMobil. So this has been in a pretty steep decline ever since the market kind of rolled over. I assume there was some kind of earnings here. I don't know for sure, but XOM has been in pretty rough shape lately. So I drew the Fibonacci lines from the high of 2.1 to the low of 2.9. We're still comfortably in that retracement level. You can see that this wick actually touched the 61.8 retracement and just got knocked down from there. And we actually closed pretty much in line or just below this low here on 3.7. So I think Exxon is ripe truly for more of a pullback. It's at 73.6 right now. I could see it coming back to 71.62, to coincide with this support zone here. Perhaps come down to 69.81 and ultimately down to 64.47 if it wanted to come back and test kind of this low here. So there is some support, both in the Fibonacci targets as well as in traditional support and resistance levels. So, we just kind of want to keep an eye on where those levels are if you're going to get into a trade, and know when to take some profit as Exxon keeps going down if it goes in that direction. So taking a look at the indicators, we've been pretty overbought, but MACD looks like it's trying to roll over again, and RSI is looking pretty bullish. So not much in my mind in terms of hope of Exxon kind of rebounding anytime soon. So definitely looking at some bearish movement on Exxon, especially if the market turns over. Dollar Tree is another one. We looked at that one yesterday. I had mentioned that we started to fill this gap. It's quite a large gap. We had a doji type candle, gravestone, as the top wick hit the AEMA, bounced off of it, and had a down day today. So I do think there's a lot more downside in Dollar Tree. I think our first target is coming back to this 87.01 retracement level. Sorry, a breakdown level, let's call it. And targets 1 and 2 would be $81 and $73 respectively. You know, there's not a whole lot in terms of support here. You could maybe say that this is some support, this wick right here. So let's draw that in just so we have it, so we know where to potentially take some profit. And that's kind of right below where our candle is, where we're currently sitting right now. So if we get a close below this line, I would think that we have potential to come back again and test this low here from the 7th, and then we have our targets even further below that. And this stock really just kind of looks like it's capable of free falling based on how sharply it's risen. You know, what goes up must come back down. You know, I do think there's some opportunity for the stock to come back down, and coincidentally, this Fib2 extension lines up pretty darn well with a lot in Dollar Tree. You can see it's touched here, 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 here. A lot of different spots. So this has served as good support for Dollar Tree in the past, and if we do push through down to it, this would be a good place to take ultimate profit. And by ultimate, I mean you close all your positions and look for a potential reversal. Now, clearly we've come below this level, you know, both prior to and after, but again, it's acted as strong support. It could do so again, and it lines up with the Fibonacci extension. So I think there's certainly some more downside in Dollar Tree. Last potential trade setup is KR, which I believe is Kroger. Yes. So Kroger had a head and shoulders pattern, followed by a gap down. I think this is, well, I don't know if this is really an island reversal, but you can see we had a gap up into this head and shoulders pattern, and then a gap down back out of it. Whatever it's called, it's certainly a bearish sentiment, and you can see that we had this little bear flag that formed. We broke out of that, and now I think there's a lot more downside in Kroger. I think we definitely come back and test this support level of 1969. We're sitting at 23.44, so you know there is potentially a lot of room for this to run back down. Now you probably want to keep an eye on this level 22.86, as that's where the recent low is, but I think we can actually come back and test this level here of 1969. Just zoom out a little bit, with targets even lower potentially. I can't even see what they are right now. 1659 would be target 1, and 1254 would be target 2. I think the markets would have to roll over quite a bit for Kroger to come down that far, but I do think there's some potential opportunity here in getting back down to the 1969 level. So that's my 2 cents on the market, folks. You know, again, the market can do whatever it'd like to do. I do think we're kind of in a no man's land in the market itself, but as you can see, there's some potential in some bearish moves if the market does decide to roll over and fill the gap and push further below it. So just things to keep in mind. Best of luck trading. If you have any comments or questions, please feel free to leave them. Happy to chat about it. Other than that, have a great night and take care.